Ladies and gentlemen, Greg McCloskey from ForexLive.com. The euro versus U.S. dollars continued its descent after the ECB rate decision and the press conference from ECB's Lagarde. The move lower has now taken the price below the 200-day moving average and down toward the low price seen earlier in this week and a swing area. So let's talk about the technicals now. What are in play? What does a price have to do to keep the bearish bias? And what are the risks? So let's get started. Looking at the hourly chart of this currency pair, the price after the ECB rate decision and all the U.S. data this morning fell below the 200 and 100-hour moving average. The price continued its move to the downside, and after the Lagarde press conference was able to crack below the 200-day moving average. Recall from last week, the price lows came in near that 200-day moving average. This day it fell below it by 4 pips before rotating to the downside. This day we bottomed right at that moving average before moving to the upside. In trading this week, the price did move below the 200-day moving average during Tuesday's trade and down to a low price about 1.0822, which was within this yellow area right here. I'll talk about that in just a second. However, the momentum could not be sustained, and the price started to move back above the 200-day moving average, finding support against it, and that gave the buyers to go ahead to push to the upside. So the break below the 200-day moving average is the second this week, and we'll see if that momentum can continue or the price can stay below that ceiling. If the price can, then the sellers have the power, the control, and we look for further downside momentum. This 50% retracement, again, I'll talk about that in just a second, would be one of the targets as well on the downside, as would be the 100-day moving average. That's this blue line right here at 1.0768. What would hurt the bearish bias, of course, is a move back above that 200-day moving average. So that's a ceiling that we want to see hold on any corrective move to the upside. We're currently trading at 1.08347. Now, I promised I would talk about that swing area and take a broader look at the 50% retracement level. And so if you go to the 4-hour chart and you take a look at it, you go back in time and you look at the different lows through here and here and here and here, and then these highs through here, here, and here, and here. We broke above that level and started to move to the upside, and it wasn't until this week when the price moved back into that swing area right through here and found willing buyers at the high of that swing area. Now that swing area goes down to 1.0808038. So getting below that level will be the next target on a break if we move back into this area. And then below that, we'll look toward the 50% retracement. That's of this move up from the October low right here to the December high right here. That level comes in at 1.07936. And below that, as mentioned on the prior chart, is the 100-day moving average. The last time the price traded below the 100-day moving average was back here in December, where the and I guess the end of November, where the price traded above and below the 100-day moving average without much luck before moving back to the upside. So sellers are in play below the 200-day moving average, stay below that level, and the sellers remain in firm control. And we look toward a break of the 1.0803. The 50% retracement at 1.07936, and then we'll look toward that 100-day moving average. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.